We have the lights, we have the camera, and now we have the action. This short clip is to welcome you as beta testers to this new video course. As an author and writer, I'm really looking forward to actually videoing stuff because it's so much nicer than writing. It's actually nicer for me because I can just stand here and talk, which is far more natural. And hopefully it's nicer for you because you can listen to me talk rather than having to read stuff, which is that little bit more difficult. I mean, it's much easier to get information in this way, I think. It's up to me, of course, to deliver the information in a way that's useful to you. I think it's quite a good opportunity for all of us in some ways, in the sense that because there is a small number of you, I can personalise what we're doing and give you what you think you want. There's a difference between what you think you want and what you actually do want, but this is something that we can discuss as we go through the course. Now there are 10 modules and there are a number of trading systems, and there are actually 10 of those. In fact, I think there's probably more than 10 in fact, because I plan to put everything into this. So in fact I didn't, for example, include Tunnel Trader in the initial 10 systems I sent out in the blurb, as it were. But that's one system I will be including. And I mean, it'd be interesting actually to develop systems as we go along. There's quite a lot of potential here. I mean, we're going beyond where we may have gone before. And I think it's interesting. And the more I think about this concept, the more I like it. There are two alternatives. Either you can just take the 10 modules, one after the other, or you can personalise this and say, okay, I'd like to start with, say, KISS. So without more ado, let me just go through the 10 modules. Actually, for that, let me just say one thing. I work with Mark Austin. Many of you may know Mark's trading service, FTSE service, and Steve Bradley, and you may also know his gold service. Now, these people are both going to be part of this course. Steve in particular is going to help with PDS, which is Piper's daily system, and he uses that system in his own work, and he calls it the Steve Bradley gold trade, which is fine because he's changed it and he's vastly improved it by adding profit targets. This is one of the reasons I really like this kind of process, because obviously I've designed quite a few systems, but I find there's nothing better than sharing these things and getting feedback from other people, because the things just dramatically improve. The same with POM, in fact. So Steve's come along, he's applied the PDS, or some of you may know it as Profit Before Work, PBW, and he's applied this to other markets, so it's now working well in gold and numerous other markets, in fact. But he's also added these profit targets, and this also makes a huge difference. The problem with PDS is it kept giving back profit. So you'd have like 50-point profit, and then it would all disappear again because the stop wouldn't be tight enough, whatever. But with profit targets, and he's using Fibonacci levels, you get that extra. Well, you basically capture all the profit. I mean, okay, you may miss out on additional profits, but he's finding it works really well. So, in fact, this is a current theme throughout this course. We may be taking something that has been available previously, but in every case, I will be doing my best to improve it and make it sure that it's better than it has been before. And certainly, I plan to make through the medium of video, I plan to make it more accessible and give a lot more detail about how it should be traded. I'll just pause it for a second. My intention is to say a few words about each system so you can judge which one to start with. So PDS, I've talked about. PDS is a daily system. It trades every day in the morning, and there's also a stop and reverse facility, so it'll trade throughout the day. You don't need to trade throughout the day. I mean, this is obviously in every case you may well need to personalise the system to suit yourself. And again, this is something we can do together. It's the beauty of this arrangement is that it gives me a chance to work more closely with you and find what you want to do. And that should be of use to us both, because I can produce a better course by doing that, which is what I want to do, and you can get the help to do what you want to do. And of course, also there are a number of systems here, so it's a matter of deciding which is the right one for you. And my suggestion, in fact, is to look at them all, to start with the one that you feel is the most attractive to you, and then once you're happy with what you're working on, that is to spend some time researching the other ones as they come along. You may well dismiss some of them. There's plenty to choose from. You may find some of them aren't suitable for you. Anyway, I think that's enough about PDS now. Let's go on to KISS. KISS is a simple moving average system. It basically uses a 100-unit moving average on an hourly or daily basis, and it's been tested so far by me on the Dow and FTSE. Now on the Dow, very interestingly, the daily system has always, sorry, I shouldn't say, not always, but most of the time, I think 90% of the time, has achieved 100 points or more profit from every trade, actually 90% of the time. It's actually a much longer term system. Some of the trades have been 8,000 points, and that trade lasted, I think, 18 months. So it's a much longer term approach. I mean, it's very nice seeing 8,000 points build up, but I think in fact it was more than 8,000. Maybe I'm exaggerating, so I can't remember precisely. But it was a lot of points. But it was quite a big drawdown. So you lost 2,000 points in the process. Maybe it was 4,000 points. Went to 6,000 perhaps and lost 2. So it's it's an interesting system. Longer term, highly accurate, well, highly profitable in the sense that over that time the profits have been excellent. Quite a large stop. I mean, if you want to catch these bigger moves, you need bigger stops. I mean, PDS has a very tight stop, and this is a consistent theme. You have to. There are always compromises. It's a matter of finding the right approach for you, it takes time to do it. It's not something that happens overnight. It might take. Well, it could take months, in fact. But the key thing is if you follow the basic rules, low risk, money management, not risking too much on any one position, then you will progress. It's only if you start doing the opposite and risking too much, you face being wiped out, losing capital, all that kind of thing. So that's KISS. Now, the next one is something called expiry systems, which I'm working on just for a few months, in fact, whereby you actually, as options expiry comes in, for a long time I've been talking about options expiry as a key and pivotal market event, and this system only works. In fact, there are 3 systems, although I've been working on a few months, I've been using them for a lot longer than that, but I've sort of systemized it a bit more carefully, and it's a good system because it catches some very good moves around expiry. But this system has, they're very simple. You won't need very much literature to explain this system. Probably 2 pages, but it only trades once a month. So it depends what you want. The stop is fairly tight. In fact, it doesn't use a large stop. In fact, it works a bit like a PDS. It breaks a range breakout type approach. So there's that. Now the next one is the extreme stop system. I've been talking about this over the hotline quite a lot. Again, it's a very simple. All my systems are simple. I keep things very simple because I think that's the best. You don't need to be complicated. I don't think it's important to be complex. I think the opposite is the case. It's unimportant. Now the extreme stop system works on the basis that the market trades to a point, maybe it bounces back, so maybe it makes a low, and if you feel that low is of some importance and the break below that low may lead to a sharp move, and that's a critical point. You don't want to use the system in trivial sort of sideways type action. I know it can be difficult to decide when that might be, but in times of high volatility, when there's a lot happening in the marketplace, this system can be just excellent. It gets you on board every move. I mean, if you're looking for a fall and that fall comes in, with this system you'll be on board that fall without a doubt. You can't fail. Conversely, if the fall doesn't come in, you may not trade, which is perfect, basically. So, of course, you may. The third alternative is that a move comes in to trigger you into the position, but that it then bounces back and you get stopped out. So I mean, it's not going to make. It's not going to always catch the move or miss out entirely. It's sometimes going to get a bad signal. But again, that's not mechanical, that system, because it's using an idea. So it's more of a methodology, if you like, rather than a mechanized system. But it's a worthy system. You can use it as you want to use it. You can use it on a daily basis. You can just day trade it. You can use it on more important support resistance levels. I've discussed trading euro with it, pound euro, in my reports, putting stops in. And I'm currently long a pound euro on the recent break above. I think 1.18. It's now at 1.20. And you got the 1.20 just an hour or so ago. Well, that takes you to extreme stop. Let's go on to the next one. Okay, next one is the tunnel trading system. This is a system I've sold recently, basically using binary bets to trade news items, and there's also a system based on the Dow, which just trades whenever there's a a tunnel selling at 95, which can be great. You know, I mean, you're going to get more losses than profits, because when you sell at 95, you're risking 5 points to make 95. So you can actually make 10 losses in a row and then make a win, and you know, more than covered your losses. But of course, but there again, if you're finding volatile action, you've got news coming out, you feel the tunnels are underpriced for some reason, or there's a chart pattern suggesting something that could suggesting an important move is coming in, and you want to be on board that move, then the tunnel trading aspect can be really nice. Certainly, I've had a lot of fun with tunnels. All the profits from tunnels. It's a good system. We then have buying and selling spikes. I mean, I've written about this in my book, The Way to Trade. I think one of the best signals I have is a buying or selling spike, especially early in the week, early in the day, Monday mornings. There have been 3 or 4 good signals this year, in fact, you know, leading to multi-month moves. And you know, you may well know how those work, but you know, you may want to systemize it in some way, and you know, I can explain more about what you're looking for. Similarly, key levels is another system, looking at, you know, the key levels of the marketplace. You could use that with the extreme stop system. You could use it with buying and selling spikes. I mean, some of these systems do overlap, because looking to the same thing, like a triangular formation is another one that we'll be looking at, because triangles give you some fantastic trades. I mean, the gold trade, I think it was last year, we got in below 1,000, and it's just kept going. I mean, gold is now in a correction. I think it's got one more sell-off to come before that's over, but we'll see. I also mentioned that Mark Austin will be involved in this course, and he'll be looking at gaps, you know, gap trading, which is his speciality. So that'll be something we're doing jointly between the two of us. And I'm hoping, I mean, this is currently tentative, but in The Way to Trade, I did interview an institutional trader who I nicknamed Pit Fox. I'm not quite sure whether that name actually appears in The Way to Trade, but I'm hoping that he'll be making an appearance. He has some very interesting views on markets. He may also do a profile, not a profile, he may also do a module, in fact, on market profile. So basically, you know, we're looking to make this a really worthwhile course. There's going to be a full-day seminar for beta testers only, which will allow me to record the modules and add more to it, and also your questions and my answers, or indeed your answers will you know, be I think a boon to the course. Give a chance to meet and discuss everything on a day. That day will probably be in March, I suspect. March or April, in fact. It'll be in the spring of 2012. We may well hold the POM seminar in the same, well, in an adjacent day. And Mark also wants to hold a gap seminar, so there could be the 3 days together. I'm afraid that those other days aren't included in the price of the beta testing, which I think is, well, I hope you agree, it's a good deal. I think that's all for now. If I've missed anything, I will. The one drop with the video is you can't edit the video. Well, you can, okay, but it's much more difficult to edit the video than just edit a Word document. But if I've missed any systems, I'll add that at another point. But I hope that's given you a good idea what this is all about. I'm very happy to discuss it with you on the telephone. I mean, you know, this is a. I mean, I want to avoid getting too much involved with telephone calls, etc., because of course it's very time consuming, and time is, I think, the one limitation we all suffer from. But I certainly would enjoy a number of telephone conversations with you, and of course you can email me and whatever. Well, great. I think that probably covers this first clip, and bye for now.